So, Alan, I want to move on to something that I always advocate for, and that is the inventory management. So, I'm not talking about knowing how many pieces you should have in stock. I'm talking about inventory accounting. So, if you, so my favorite example is this: if you made $1,000 in sales, you bought that $1,000 worth of merchandise, right? So, and then let's assume that you paid 20% of the sale in buying. So 20% of that is $200. So you got $200 worth of inventory that you had to have in stock at the beginning of the month in order to make that $1,000 sale. So of course, you don't want to just sell it one month and then you're done, right? So you have to have inventory to continue the sale. So that means you need to have at least 2 months of inventory at the beginning of the month to make that $1,000 sale. But it never works that way because you're never carrying 2 months worth of inventory. You're carrying more. So in this example, which is a very healthy scenario, 20% of the sale is going to purchasing the inventory. If you have 4 months of inventory, which is usually the lead time for people to order from their manufacturers, that's $800 already. In other words, before your Amazon commission, before your FBA fees, before your storage, before your reserve, before everything else, you've already spent the money on the inventory you have to have in stock. So therefore, inventory accounting is the most important in order to determine the health of your operation. So how does a seller stay on top of this?
Yeah, so I will let Iona jump in a second with this as well. Again, she's our accountant. I think this is why as well, accounting is just so important to be all over, right? So you've got the cash flow to be buying inventory. And I think this also leans to one of the most common mistakes we see sellers make with their accounting. And that's when they're actually they're expensing their inventory when they purchase it, when they need to be expensing their inventory as they sell it. So once they've got that inventory, it needs to go onto the balance sheet as an asset, and then they expense it as they sell it. But Iona, I'll let you jump in because you're all over this kind of stuff.
Yeah, sure. No, I definitely agree with what you've said. Like, it's super important, and there's a lot of things that go along with it. Like with Amazon accounting, like I said earlier, if you run out of stock, it's not just like you've run out of stock and people are waiting until you get it back in. You've sort of lost a whole heap of ranking, and there's many things that go along with not having stock managed in that way. And yeah, like, I mean, as much as that top line is important, it's the second piece. You can't have a top line if you don't have stock to sell. And so the biggest thing of Amazon selling is actually having stock and having the right stock and being able to analyze it in the right way. And so, yeah, like Ellen said, accounting for inventory in the right way is definitely beneficial to the business and for management accounting. And like you say as well, it doesn't always happen like clockwork. And so, you might get stock at a certain rate today, and the next time you buy stock, you might get it at a lower rate. And so you need to consider all of those things that go hand in hand with the fact that you actually get to do Amazon accounting because you've sold products.
Yeah. Well, I mean, this kind of ties back to that SKU-based accounting rather than just posting it as a lump sum. So you cannot have inventory accounting without posting the sales to individual SKUs. So that way you are kind of covering the whole spectrum of everything that you need to be tracking. What are sales for each SKU in terms of dollar value and also units sold. And then on the other hand, how many units do I have in stock and how many units have I sold? So that is all key. And of course, it comes down to structuring. But there is one other thing that I want to mention, because Ellen mentioned it very briefly, but it's so important. A lot of sellers, when they buy the merchandise, the shipment arrives, and then they have this purchase invoice, and then they post that to cost, right? And it's an expense for them, right? That's absolutely the wrong way to do it, right?
Yeah,
So-
exactly right. And it's definitely a common mistake. And COGS is usually your largest expense. So you do want to be expensing those as you sell. That's why it is called cost of goods sold. And then also tying back to what you were saying before around, splitting things out by SKU. I think that's also like why it's really important to understand your profitability on each SKU, because you're essentially giving up cash to buy that inventory. And should you be doing that for a SKU that is not profitable? Could that be better invested in another line? So these are all kind of things to consider, and why understanding your accounting is so important.
Yeah, yeah. I mean,
Yeah.
let's break that down. So for those listening, so they can use this as a model. So first of all, when you buy inventory, it arrives in your warehouse, and you got the container or whatever, and then you got the purchase invoice. That is not a cost. It's an asset, right? It's just like buying a car, and it sits on your books as an asset. In fact, let's imagine a scenario where you've got a container full of consignment arrived, and you put it in your warehouse. There is demand for it. It's obvious it's going to turn into cash, but not yet. You can, in fact, go to the bank with that and say, can I borrow money against this inventory? And they will lend it to you. But if you post it as cost, you're going to be in a huge loss, and nobody's going to lend you money. So this is all about a function of the accounting. So when you have your purchase invoice, you post it to your books, it has to sit on your balance sheet. So
On your
I don't want to get into the debits and the credits, but when it's in balance sheet, it's an asset. But when you make a sale, each sale generates that revenue at the cost of the unit that's sold, so that the cost of that unit needs to be transferred from the asset into the cost of goods sold, and only then it needs to appear, right? So that's the nature of the numbers. And how does a seller handle that changing from asset to becoming a cost of goods sold?
Yeah, sure. So, yeah, certainly.